Welcome back to the programme. 8:23 here in London this Friday morning. We have European equity markets moving lower this morning, down by 0.6% on the Stoxx 600. That is all geopolitics. Bucking the trend, L'Oreal in the consumer goods space up by 5%. So really bucking the trend this morning. It seems that this business bouncing back as Europe and North America offset some weakness in China is the overarching story. We saw it trade higher in the United States and lift some of its peers in the United States as these numbers came out. Let's get some analysis. Bring in Deborah Aitken from Bloomberg Intelligence, senior analyst for luxury goods and beauty. She's got a number of stories she can talk to us about this morning, so really interesting to get your perspective. The L'Oreal story then, talk us through it. What's been going on here with goods and beauty then, Deborah?
So I think into numbers, the sector overall was quite muted, low. We'd seen a couple of numbers from the US with Ulta, one of the retailers over there of beauty, just not perhaps having enough new product and innovative type brands in the store, and so it suffered a little bit. And some of the industry data wasn't very strong. So we ran a 4.5% growth at Q4 from L'Oreal. We saw the second half of 23 a bit slower for the sector overall and for luxury goods too. So very strong one half, slower two half. And all of a sudden we run on 9% growth into 1Q. And that's after Beiersdorf, which owns Nivea in mass market, but also La Prairie at the high end, ran 7% plus in its 1Q. So it's kind of, well, actually, when we look at the numbers, Europe is double digit, North America is double digit, and high single digit if we pull out one early order into Canada on IT. And emerging markets are up 16%. And then across that, you have 3 out of 4 sectors outperforming. So we're still awaiting Lux repair, and we're still awaiting China repair. So North Asia is still slightly negative.
Well, let's zoom in on that China piece of the equation, the softness there. walk us through what that means.
So we've been waiting for China to gradually improve. We saw at one point 2.5 years ago, half of the sales growth from the high end in the marketplace, a real trend down, and part of that from the Chinese consumer was because they were at home and not traveling. It really is big business to the beauty and the luxury goods industries. Yeah. And what we're seeing now, if we look at the latest numbers we have on the travel side, for China, they're staying at home and they're traveling. So, for example, just to switch over, but we are talking about L'Oreal Luxe and the luxury industry. If we think about 2019, we used to say the Chinese consumer globally accounted for 1/3 of the luxury goods market. Yep. And right now it's 23%. And they used to spend about 10% of 10 of that 33 in China. It's now 16%. So they're doing much more in China. But as a cohort, they're still not where they were, and that's the story.
Just very briefly, I've got about 45 seconds here. Unilever to delay its recyclability, that's a hard word to say, pledge by as much as 10 years. How significant is this? What does this do to its ESG credentials? Yeah,
and I think it's about, it still scores very well on ESG, but it needs to really focus in terms of its profitability on its biggest categories and businesses, and that's been the promise from new CEO Heinz Schumacher. And that's where we'll see it moving forward for the sake of the P&L.
Deborah, great to see you. Thank you very much indeed for stopping by to update us. Deborah Aitken joining us from Bloomberg Intelligence.